Imagine a future where the money in your pocket isn't really in your pocket. A world where cash is gone in every transaction, every coffee, every tip, every donation is monitored, logged, and judged in real time. Now imagine that same system could decide where, when, and how you spend your money. Too much meat this month? No groceries for you. Donated to the wrong political group? Your funds are temporarily frozen. Live outside a designated zone? Travel denied. Sound far-fetched? It's not. Around the world, governments and central banks are developing what they call CBDCs, central bank digital currencies. They promise speed, efficiency, and modernity. But underneath the buzzwords lies a potential nightmare of surveillance and control. Today, on the Monetary Mysteries, we ask, is the digital dollar a financial innovation or the ultimate trap?
Let's get one thing clear. CBDCs are not the same as crypto. They may sound similar, but in practice, they are total opposites. Where cryptocurrencies like Bitcoin are decentralized, permissionless, and censorship-resistant, CBDCs are centralized, permissioned, and programmable by governments and central banks. So, what is a CBDC exactly? A central bank digital currency is a government-issued digital version of national money. In the US, that would be a digital dollar, issued and controlled by the Federal Reserve. Not a bank, not a payment app, the Fed. You wouldn't hold your money in a traditional bank account. Instead, it would exist directly on a digital ledger, overseen by the central bank itself. No middlemen, no privacy, no escape. Supporters say this is more efficient, but critics argue it's a gateway to complete financial surveillance. Even the World Economic Forum openly states that CBDCs could offer full traceability and programmable functionality. What does programmable mean? It means your money could be coded with conditions. Conditions like when it can be spent, what it can be spent on, whether it even remains valid after a certain date. Let that sink in. Money with an expiration date. Governments and central banks are rolling out CBDCs with all the right buzzwords: inclusive, secure, efficient, modern. They claim this is the next logical step in financial innovation. And to be fair, some of the promises sound good on the surface. Transactions settle instantly, even on weekends. Cross-border payments become seamless. Fraud and tax evasion eliminated. No more lost wallets or misprinted bills. A more inclusive system for those who don't have traditional bank access. But here's what they're not saying. To achieve all that efficiency and security, you need to give up something else. Privacy, autonomy, control over your own money. This isn't just a better version of Venmo or PayPal. This is the state as your banker. CBDCs would allow governments to watch and potentially regulate every financial move you make. They could impose instant taxes, deny payments to certain people, places, or companies, restrict purchases based on your behavior, your location, or even your social score. And it's not speculation. These features are actively discussed by policymakers and central banks. What happens when they decide that certain purchases, say luxury items, firearms, or plane tickets, are no longer aligned with public values? What happens when your spending habits become a form of data that feeds into policy decisions? The sales pitch is convenience, but what they're actually selling is compliance. Let's pull the curtain back. CBDCs aren't just about modernizing money. They're about centralizing power. Think of CBDCs not as digital cash, but as digital leashes. Governments could set expiration dates on your money to encourage spending. They could apply negative interest rates to discourage saving. They could issue targeted stimulus that can only be spent at pre-approved vendors. They could shut off your wallet if you violate a new policy, or even just tweet the wrong thing. In China, this isn't hypothetical. The digital yuan is already being tested alongside the country's social credit system. Miss a loan payment, and you could lose access to travel, education, or your money. In Nigeria, citizens were encouraged to use the e-naira, and when they didn't comply, the government responded by limiting ATM withdrawals to $45 per day.
That's not incentive, that's financial coercion. And in the US, while the Federal Reserve insists that the digital dollar would protect privacy, they've refused to rule out programmability. There are no guarantees, no defined limits, no public voting. The infrastructure is being built. And once it's ready, all it takes is a crisis to flip the switch. Sound familiar? Just think of the Patriot Act. Crisis breeds control. Let's talk about something we often take for granted. Cash. It's simple, anonymous, and doesn't need a signal, app, or password. You can hand someone a $20 bill, and no third party needs to approve it. But CBDCs threaten to replace that with something very different. Programmable, trackable, conditional currency. We've already seen governments around the world pushing for a cashless society. In Sweden, only about 1% of transactions use cash. In India, demonetization in 2016 wiped out high-value notes overnight. In Nigeria, cash was made nearly unusable through withdrawal limits and expiration deadlines. And in the US, more and more places no longer accept cash at all, without any legal change. Just slow, quiet erosion. So what happens if cash disappears? It's not just about convenience. It's about choice. Without cash, your only option is to transact inside the system, a system that can change rules at any time without your input. You could be locked out of your money for missing a tax deadline, breaking new speech codes, being in the wrong geographic zone, or simply not updating your digital ID in time. And once the system becomes exclusive, resistance becomes illegal by default. We're not just talking about losing paper money. We're talking about losing a final fragile line of financial freedom. Let's walk through a few hypotheticals. What if your country institutes a carbon tax and tracks your spending? You've flown too often this month. Your transportation budget is now restricted. What if a new political party rises to power? You donated to the other side. Your account is flagged. Your transactions are delayed for compliance review. What if you participate in a peaceful protest? You violated a public safety zone order. Your CBDC wallet is temporarily suspended. This may sound dystopian, but these powers already exist in fragmented forms. In Canada, during the trucker protests in 2022, the government froze the bank accounts of participants without a court order. In China, access to public services, including banking, is already tied to behavior scores. In the US, multiple platforms have debanked or deplatformed individuals based on political views. Now imagine that power, not in the hands of corporations, but centralized under a single unaccountable institution like the Federal Reserve. CBDCs provide the infrastructure for a fully automated system of economic punishment. No judge, no jury, just code. And once that code is in place, history shows us how quickly power will be used, especially when no one is watching. So, where is all this going? As of 2025, more than 130 countries are researching, testing, or launching CBDCs. This is not a fringe idea. It's a global movement. The US is piloting programs. The EU is preparing legislation. China is rolling out infrastructure tied to national ID systems. The narrative is coordinated, strategic, and carefully worded. Faster payments, digital resilience, financial modernization. But history reminds us, control is often introduced in the name of safety. Once CBDCs are live, they likely won't come with overt restrictions at first. They'll look like a convenient app. They'll offer bonuses for early users. They'll integrate seamlessly with your phone, your taxes, your health record, your credit score. But under the surface, a new form of governance is being built, not by elected officials, but by algorithms, economists, and unelected central bankers. The system isn't being built for your freedom. It's being built for predictability, efficiency, and above all, control. So what can we do? Stay informed. Use cash while it still exists. Support decentralized systems. Ask uncomfortable questions. Because once control is coded into your money, it may never be yours again.